Hello and welcome to this ET Now special. I'm Nayantara Rai, today coming to you from the Oyo Room headquarters in Gurgaon. And I've got with me Aditya Ghosh as well as Rohit Kapoor. Their annual report is out, the financial results are out. Thank you, gentlemen, for joining us here on ET Now. So what we have seen is at a consolidated loss of $335 million. But we've also seen an exponential rise in revenues in India and South Asia. It's a 4x increase. Having said that, $335 million is still a big loss, but look at the revenue surge to $950 million. If I could get your first take on the reactions, I'll let you decide which one wants to take this.
Sure, Rohit, go ahead. So, as you see, the global revenues have grown by 4.5x. India revenues are up by approximately 3x. And the $335 million number that you spoke about, of that, India, which is a matured market, contributes 83 out of that. So most of that losses have come from our investments in new markets, international markets, and that has been, all of them have been last year or late FY18.
The way we kind of see our markets is they kind of go through three phases. There is the initial phase where you're coming in, you spend not even a year, you're putting in your initial costs, hiring the people, and your initial establishment costs. So these are markets like the US, Canada, Latin America, and then we see these markets move to phase two, where you've created enough brand presence, consumer insight, and you start seeing gross margin improvements. So these are markets like China, Southeast Asia. And then, what we are seeing, and that's the kind of great news that we have today, is that more mature markets like India, can see a clear path to profitability. So look at India, right? To the point that Rohit was making, you have the losses coming down from 24% to 14%, actually it's I think 13.8%. And you're seeing an expansion, revenues growing 2.9x, so 3 times growth in revenues. But the best news is that we've also seen our gross margin improve from 10% to 14%.
14.7%. Yeah.
14.7%. So what you can see is that as each market begins to mature, they're following a certain pattern.
I take your point.
And that's where,
So basically you have invested a lot more, you have increased your global footprint significantly,
yes.
And that's why the loss you're saying
Yes.
of $335 million. What I don't have in this annual report is, and we've done interviews in the past, and you've given some, talking points on it. If you could, go into that. It's still daunting when you hear a figure like $335 million, right? Mm-hmm. It's still about 1/3 of your top line. So having said that, how will you achieve profitability? Is it possible in this year at all? A break even, is it possible? What is the goal for 2020?
Let me take that and I think can chip in. So look, I think we've spoken about it in the past as well. Path to profitability is very important for every business and country. However, as Aditya said, there are businesses and geographies in different phases of the evolution. And they'll take their right amount of time to get to a profitable outcome. So importance is that over the last 3 months, we have said that every business, every geography, every business line, we need to see a clear path to profitability. Now, there's no hard deadline to it. The teams are working towards.
So there's no target for this year for breaking even or being profitable?
No.
You have not given a mandate as yet, or you've not received a mandate as yet?
So first of all, I think this is about FY19 results. I think to give any forward-looking guidance on these things, A, we are as a private company, we are not obligated, and B, I think it's not fair, right? But at a structural philosophy level, we have looked at every business, every geography, and say, how do we get to a profitable outcome in this business in a reasonable amount of time? And every business is different, every geography is different.
I take that point.
So the real story, if you ask me, is that the revenue is going from 221 million to almost 950 million plus.
Yeah.
And India, which is the matured market, losses coming down by almost half.
And with the margin expansion.
Absolutely.
In fact, Nayantara, if you remember, one of the first initial, interviews that you and I did, and I think it was Ritesh, myself, and you together, early, almost about a year back now. And we had said that, look, last year we've gone from 45% to 24%, and we will absolutely
Yeah,
try to
I
halve
know.
it again.
I remember
right?
that.
And I think that's what we've come through on, despite the expansion.
He did give a guidance there,
Yeah,
by the way.
but I think what Rohit is also saying, what the world has changed on us in the sense we're now present in so many more different geographies, right? So to be able to give a guidance where different
Will you
parts are
stay in all
moving
these
differently.
geographies? Because in the sense that FY19,
Yes,
gentlemen,
yes.
has been a very action-packed year.
Yes.
First of all, fantastic for both of you. You got big promotions. We also saw share buyback. We saw a
He's got the real
fundraise.
job.
And you
No,
also
I-
saw bad
yeah,
news
yeah.
with
Yeah.
scaling back, which is also cyclical.
Yes.
Businesses go through with it.
Yes.
You got a lot more of the press maybe because of the times that we are in and because you're a unicorn. And having said that, but when you look back at the year, do you think and Ritesh has talked about it, that you grew too fast. So when you, in 2020, do you think you'll stay in all these geographies and will you enter new geographies?
Let me talk about a global perspective, and then Rohit can talk about his plans in India. Do we see any kind of us leaving any geographies? We don't see that, and I've just come out of a board meeting last week. Now, having said that, we never expected coronavirus, for example, right? Who knows what tomorrow brings? But at the moment, we are absolutely going to go deep and double down on all the geographies which are working really well for us. Europe is showing fantastic potential. China, of course, if you keep the current situation aside, is a very strong market for us. United States, Latin America. So while there may be a few, minor tweaks here or there, but we're absolute. This year is going to be about consolidating our presence, following that path of profitability, and of course, India will, of course, play a big role in that.
What are your India plans since you've taken charge? And like I said, it's been a big year for promotions as well. We've done an interview in the past, but that was, when the times were not so great. In the new year, what are the plans for India?
I think, look, we spoke about a month back and the plans remain exactly the same. There are 4 focus areas for me personally and for the entire leadership team in India. And one is really strengthening our partner relationships, because we have a fantastic base of partners here, but some things have gotten frayed on the edges. And there is a small section of partners who have not been so happy with us. So one of my biggest agendas is to make sure that our partner relationships are top notch and all of them prosper with us and we prosper with them. Right? That's priority number 1.
Could we also see a cleanup of the partner exercise? Because it's just because they're partners and they became your partners doesn't mean they necessarily have to stay your partners or are good partners to have, right?
So look, most of our partners are actually fantastic partners. Right? They're a very small percentage where our philosophy doesn't match on, let's say, customer service.
And then they harass you.
No, I won't say that. I won't say any partner harasses us. I think it's a relationship. It is a economic relationship, business relationship.
I'm of course referring to
personal
those
relationship.
FIRs and those blogs that go viral and things like that.
Those are things which I don't want to comment here, but I will say, if you look at our large partner base, I think we have very good relationships with a large majority of them. There are a small number of partners who are not so happy, and honestly speaking, my priority is not to focus on what they did, is to focus on what can we do better.
And what we have also seen is that despite a lot of new partners coming and joining us, I'd say almost 2,500 partners today would have more than at least 3 properties with us.
Okay.
We have about 3,000 partners today who have been continuously been with us for more than 3 years. And despite the fact that we've added so many more, and there will be these aberrations. And I think Ritesh put it very beautifully, and we talked about it a lot internally, that why focus on why they're saying what they're saying? If someone has something to say, focus on what they're saying. Is there a place to improve? And any of these events should, mature companies, we should look at them as opportunities to improve. And not just in India, like Rohit pointed out, even
But
globally, this is going to be one of our key focus areas. Even last week, I spent a lot of time personally with our asset partners in the UK, for instance, to see what can we do better there.
Because it does say in your annual report that Mission 2020, there is a subheading for partner issues. And it talks about better communication and expectation setting as to OYO operating policies and guest experience standards to minimize disputes.
Yes,
so clearly that is a big focus area.
Absolutely.
So that's one. The second clearly is if there is a very small subsection of customers who are not experiencing the value that we bring to the table, right? Focus on that disproportionately. Make sure that the entire company is focused on solving for that. Third is building a great employee culture, right? And for me personally, that's a big passion area on how do we make sure we have a fantastic culture which takes OYO into 2020 and much beyond that. And lastly is the path to profitability, where we look at every business like a sound business logic, saying is there a clear path to profitability in the business and what do we need to do to get to that outcome.
Now that the financial year has come to a close, can I ask you, and I hope you will be candid, did you have to scale back targets I know you're a private company, did you internally scale back your targets for the year? Because for a lot of reasons, things perhaps didn't go the way you had anticipated them at the start.
For the coming year, you mean 2020?
First, did you scale back for FY19 and have you done that already for the new year, 2020?
No, actually, this right sizing exercise that we just went through, and it's a difficult exercise, right, for any company to go through, and especially for a startup, young company which has never done this before.
You're perhaps the first startup to have done it without shutting down.
Exactly, and
they either shut down or, but this doesn't happen, right?
And these are like one-time opportunities to see where can efficiencies come in, and I want to put some more color to it. First of all, it was not a short-term exercise, that you have to just show some line item cost efficiency and you go do that. This is a very well thought out, and it's across the globe. What are the global capabilities that you create? Where do we not need to replicate teams? How can we use technology better?
There's been a lot of numbers that have done the rounds. Why don't you both clarify for us what kind of a scale back we're talking
I think it was about 15 to 20% of the India numbers.
I've shared the numbers. We had an employee base of 12,000 employees in India, South Asia. Of that, we had restructured about 15 to 20% of the workforce. And that's complete.
And on the other hand...
is that done now?
That's done.
Do you want to assure everybody tuning in?
Absolutely, that's done.
It's done. No more restructuring for now. And globally also?
And globally also, we're just coming at the final end of it, so it's behind us. And we are...
It's 15 to 20% globally?
No.
It can't be because you just entered.
South Asia just to be clear. 12,000 employee base, 15 to 20% of that in South Asia. Also, we grew from about 2,000 employees about 18 months back to 12,000. So we scaled back from there to about 15-20%. So we still remain a very large workforce. So even very talented colleagues.
Even net, you grew from, if you just take that number, you grew almost 5 times in 1 year. The net addition almost, give or take, and which is in line with the revenue growth. You're seeing a 4.5 x growth in the revenue side. And on the other hand, the capabilities that we want to build, engineering, data science, software, that we are continuing to look for new talent. So, and just depends on market to market.
When you touched upon it, when I entered your building,
yes,
a part of me was like, gosh, why am I not in my studio? Because you do have a large presence in China.
We do.
You all travel to China. A lot of employees, I'm sure, go to China. You have Huawei in the same building. You talked about coronavirus. That's going to be bad for business. I mean, there's of course a human angle to it. Sometimes you think it's a dystopian future here. What does this coronavirus mean for OYO?
Well, first of all, I just want to say that and Aditya should answer the China question. This is a moment of significant distress for our Chinese colleagues, and we want to reach out to them. We have done that. We are extremely supportive. We are absolutely well-wishers of what's happening in that economy for our colleagues as well. And this is not about a country or a particular race or anything.
No.
This is a global
This is a global problem.
Global issue, and I think more than focusing on what does that to our business, occupancies, etc. At this point in time as an organization, all we are focused on is making sure that to the best of our capabilities, we reach out and do our best there, which includes monetary aspects, which including a lot of our employees are donating part of their salaries. Ritesh has donated 100% of his salary to the cause. Plus more than that,
he's given 100% of his salary?
Ritesh.
Yeah.
And a lot of other
What is
employees
his
are doing
salary?
that is, do you have Ritesh's number? You should ask him. But more than that, I think it's about telling our colleagues in China that we are there.
Yeah.
Right.
As Rohit said, the immediate priority, and we have literally, like you said, we have thousands of colleagues in China. So immediate priority is they are safe, they are okay, right? And we have a 24/7, epicenter running, absolutely in touch with every colleague, so on.
You set up a special call center or something?
Yes. The second is whatever we can contribute, because now there are export restrictions on a bunch of things, but whatever else we can contribute. The second aspect is there's going to be some kind of a short-term impact. I don't think any company operating and having a large presence in China can shy away from the fact that there'll be some short-term impact. What that will be, every day, as the situation develops and changes, we are tracking it. So I think we'll have to probably wait and see a little bit. But if we zoom back and say, we entered the country about, I think, a little bit over a year back, just a little over a year back. And we are trying to build a strong business in China. It's a very strong market. And just like India has performed, we expect that as the market matures, we'll have growth in revenues and we'll have reduction in losses, profitability. So we are absolutely committed to the market whole hog. And we just want to get past this, just like almost everybody else there, and of course many other companies who are operating there. So we're just trying to kind of take it day by day and as seriously as possible.
How many employees and partners do you have in China?
I think give or take about, I think it'll be something like 7,000 or 8,000 employees, direct employees.
Yeah.
And then we have a lot of indirect employees.
Correct.
We're spread over more than 200 cities. So we have a significant presence. We're the largest player in China.
Can you tell me a little bit about as a company, because you talked about how Ritesh has donated salary, you set up a call center, but with places in a lockdown, how does it exactly work? Or can you show some insight?
Hard.
Because
It's hard because in a lot of places you do not have a physical space anymore that people are coming into, right? I mean, there could be offices that are shut down or people are quarantined or whatever. So it's actually really comes down to colleagues reaching out to colleagues. There are buddies and attached to different people. So that's
you have a buddy system.
Yes, and as things are developing, so it's us being in touch with leaderships there and them in touch with theirs. So fortunately, we are in touch with everyone. So the communication systems are very, very strong at the moment. So let's just see.
And I'm sorry to ask this question.
No, go ahead.
Have any of your employees suffered from coronavirus?
Or? One is actually, I know of one, but fortunately he's recovering.
Oh,
so
touch wood. Yeah, touch wood.
Yeah.
Okay, I'll move on from this now.
Yes.
I want to just get back to OYO, the enterprise, the startup. 2019 was also action-packed. Not your fault, but because of WeWork, the failed IPO, and one of your biggest investors, SoftBank. We saw a reset after that, a global reset. We've recently heard commentary from my associate Som as well. From that perspective, can you give us a little insight on, because there were all these reports that SoftBank is forcing its startups and its investments portfolio to carry out a lot of decisions. Do you want to clarify the air on that?
I think, we read the same papers and we read the same news stories.
Rohit denied it, I know that, yeah.
So I'll tell you, I'll give you my perspective as an operating leader, I'll give you my perspective now on the board. SoftBank is a very strong and committed shareholder to OYO. That's how I've seen it and I've experienced it. As an operating leader all this while, I had no pressure or no interference from anybody. On the board, Munish Verma, who's the SoftBank Vision Fund Director, Munish and we get along really well, great thought leader, and there is absolutely no one person putting pressure on anything, at least not for us. So the expectation in my previous role from the board or my current role as a board member is management team is putting together an operating plan, you present it, we'll scrub it, and then just let's try really, really hard to deliver on that. Life is going to change, but we know how quickly can you adapt and be flexible. So it's like any well-run board company would do.
Okay.
So, yeah.
Rohit, if I can ask you this now. Yes, your revenues have grown exponentially, but I'll come back to that big loss, $335 million. How do you cut a loss of $335 million? And I'm sure you guys are still very ambitious while you consolidate and you got the various geographies and phases, etc. How did that happen and what's that roadmap?
Let me say one way to see the losses is investments actually. Because these are our investments are into people and into building up new countries, processes, systems, tech, etc. Those things need investment during the first few years in any market, for any company. We are no exception. Right? So the right way to see this, and if you look at our numbers, it's becoming very clear. So while the percentage losses have grown globally, the India losses have halved. So it shows that in mature markets, we have the ability to move the dial, increase the revenues, and put the losses down as a percentage. Right? Now, how does it happen? One, continue to focus on creating value for our partners. So our partners increase their RevPARs or occupancies when they come and join the network. That needs to continue to happen continuously. So investing in new areas of revenues and growth. B, clearly looking at parts of the business which do not make sense from a financial standpoint and taking early calls on those. That we have done. C, beyond that, looking at every cost structure of the company and say, is this cost really needed? Or can we do much better in a different fashion? So for example, if there are large field teams somewhere, is that job much better done by people who are enabled by tech in a central role? So it's like running any other large company where you look at all the line items right from revenue down to the last pie, have the discipline of maintaining that rigor and seeing it for the month as well as 6 months down the line, 1 year down the line. I think it's very much possible because the most fundamental aspect of OYO is two things. One, we have a very, very large customer base which trusts us on a daily basis. B, we have a very large partner base which benefits from us, right? And we benefit from them. As long as we keep focusing on these two things.
And the numbers...
rest is and we have all...
And the numbers speak for themselves, even today, right? 63%, 64% of the revenue is coming from India. About 24% of the losses are coming from India. So as the market keeps maturing, now, but it's not easy. Leadership teams, all of us have to stay steadfastly focused on what's right for the business. And I think, but what you can clearly see is that the business model is working.
So this is a business, so again I come back to what I asked you, and I'm going to wrap up with that.
Yes.
So 2020 will be about consolidation, it's going to be about efficiency, creating efficiency and a road to profitability.
Yes.
So no maniac-like
I'll
expansion.
give you 5 words for 2020. Accretive growth, partner focus, getting to every customer complaint in a big way, creating a great culture and building a path to profitability.
Absolutely.
And you'll keep hearing the same thing every time you interview me.
Okay. But the path to profitability I think still needs to be expanded upon. I take your point. But once again, I want to get a sense on this. With the slowdown that you're seeing in India, coronavirus in China, elections in the United States, Brexit and all of that, will it be a year of consolidation? Will you exit geographies? You didn't answer that very clearly.
No, I don't think we're going to exit geographies.
Like, do you really need to be in Las Vegas?
Yes, it's a big hotel market, but I think to the point you were making, and I've seen this even in my previous life, whenever there is so-called slowdown, the business models with the lowest cost structure and the most affordable prices
you pioneered that with Indigo.
Always wins. So I think hopefully I'm second time lucky too.
Also, you should celebrate that the Indian brand is in Las Vegas.
Yes. And we at Etina, by the way, our motto is Rise with India. And we can see the synergy with what you guys are doing at OYO. I know you said you're a private company and no guidance, but do you think you'll end 2020? What's the plan? Like break even? Close to break even?
We answer the same question asked in many different ways the same way. No guidance.
Okay, with that, gentlemen, I'll thank you for being so candid. As candid as you can be.
Yes.
Thanks for the interview.
Thank you for
having us.
Thank you so much.